Hello guys and welcome to my YouTube channel once again. In today's video we're going to analyze this pair. This is a VIX 100 index and we are going to do a kind of a top-down analysis to spot a possible high probability trade setup. All right, so on the weekly time frame you can see after the market sold nicely to the downside, we have this a rejection here. Then the market bottom to this level, a previous resistance zone, and also rejected again. Now the market also sold back to this same support zone. You can see this is actually a support zone. Then it bottom to this level. This is the weekly time frame. So right now, to take an entry based on what we see on this weekly time frame, we will have to wait for the market to break above this zone, because what we have here looks like an inverse head and shoulders pattern on the weekly time frame. This would be the left inverse shoulder or inverted left shoulder, and this is the head, and this will be the right shoulder. All right, so we expect the market to buy based on the weekly time frame to buy. They expect the market to break and close above this zone on the weekly time frame before we can confirm that the market will continue with the buys to go up to this level. All right, so meanwhile, since this is a weekly time frame, we can't spot an entry here. It's too high, and any stop loss you want to take, if you want to put a stop loss on the trade this space, it's going to be too much. The stop loss must be below this level, and you know what it means. So for that reason, we have to go down to a lower time frame to spot, because this trend we are seeing, this can be this little movement you're seeing on the weekly time frame might be a very big trend on a lower time frame, or the like the 4 hourly time frame, 1 hourly time frame. All right, so let's go down to the daily time frame. The daily time frame, I can see a structure here. All right, so the market actually if you can see, the market bought to this level, then it sold below this level here, created a kind of a change of character. This is a lower low at this point. This is a lower low here the market created. Then the market bought up to this level. Okay, so if you want to apply the market structure approach, we'll notice that there's a very high chance the market should be selling from around somewhere here. We have to bring a Fibonacci retracement tool to measure from here, this high to this low. And if you look see very well, you'll see that the golden zone is just around this level here, and tracing to past activities in the market, you'll see that this same zone is in line with where the market had sold previously. All right, when the market had sold previously, we have some sell activities that happened around here. And you look at the sell activities that happened around here previously, the market sold from this level down to here, sold again from here down to this, and even up to this level here. So it came here again and there was a rejection, then it bought up and tried to buy from this same zone. So now after breaking through this zone again, it retested it and sold. So the market is back at this same zone. Now what is there is that the market, there's a high chance the market can sell from this same zone again now that it is there. All right, the golden zone falls around that same place too. All right, so we have to still go down to a much lower time frame to spot our possible entry, because you can't still enter here on this time frame. We want to take the sales, because right now as it is, we saw a possibility of the market buying on the daily, on the weekly time frame, but on the daily time frame I see a chance of the market selling again. And even if you take a sell from, let's say, from here, if you're able to take here, your stop loss is still going to be too large, because this pay is somehow volatile. If you'll be risking about $23 lot size, you can see with the minimum lot size of 0.5, you'll be risking about $23 to trade this, to take an entry from this point down to this level here. Although you'll be making about $28 $98 in profit, that is about at least 1 is to 3.8 or so. All right, no, I think one is to 3 point 1 is to almost 1 is to 4. All right, it's not that bad, but it's too large to trade just one position up to this level. All right, so we need to go to a much lower time frame to spot a possible entry. All right, so let's go down to the 4 hourly time frame. Okay, so on the 4 hourly time frame, you can see what we have on this same zone. We can see the rejections already, and then okay, yeah, you can see the rejections on this zone. This is the first time the market got it rejected. The second time it closed bullish with an engulfing candlestick. Then this is the third time, so the market is rejecting again. All right, current candlestick is still rejecting, and for this reason we are expecting the market to sell nicely from this zone. expecting the market to sell from this zone. So I want to go down to a much lower time frame. If I want to take an entry on this pair, I will want to go to a much lower time frame to see how to reduce my stop loss. All right, because it is best if you can always try to take in the trades with from setups with that can help you risk very low, very little, as much as little as you can. Even if it is $1 to risk $1, it is very okay. Instead of risking $10 to make $30, there's nothing wrong with that. But I always look for chances of opportunities to make to risk very small. So at this point, I can go to, let's say, the 1 hour time frame. All right, so on this 1 hour time frame, what I can see here is there was a consolidation, and the current candlestick is one moment. Good. Now I can see there was a consolidation here on this 1 hour time frame. All right, there was a consolidation, and the one hourly candlestick, current 1 hourly candlestick has broken out of the consolidation, but it has not yet closed. I don't know how long it will take. Okay, we have about 37, about 43 minutes for the current 1 hourly candlestick to close. So if this 1 hourly candlestick successfully closes bearish, then the next candlestick buys back to this zone. Like we have something like this. This one closes bearish here. Then we have the next one buying back to this same zone. One moment. Okay. Then from this point we want to see the market selling. There's a very high chance it can sell here. There's a very high chance the market can sell here massively to the downside. All right, so just have to wait to see the market break out from this consolidation successfully. All right, and with this, if I'm taking an entry from this zone, and stop loss should be just above that zone. Stop loss should be just above that zone, maybe somewhere around here. And you can see if I'm taking an entry, you can see my stop loss is going to be maybe around 3.56. I'm not risking $23 like what we saw on the daily time frame. Then we'll still make the same profit or even more compared because our stop loss, our entry, and our risk is reduced. Okay, I just hope you understand what I'm trying to explain here at this point. So that's what I would do. Then you can even go to as low as the 15 minutes time frame to even understand it more better. You can see the zone we just marked is a very nice zone. In fact, the market actually created a double top. If you look closely, you'll see there was a double top here. This is the first top, this is the second top, and then this is the neckline the market broke out. So we were waiting for a retest here, and we want to see the next 1 hourly candlestick coming back to retest here, so that we can take the trade nicely. All right, so we can take the trade nicely. All right, so if this zone fails, if after taking a trade on this zone, then the market fails, like after the proper retest, or if you do not have a proper retest, the proper retest I'm talking about is actually that same 1 hourly time frame. Like you wait on the 1 hourly time frame, the market closes on the 1 hourly time frame, then the next 1 hourly candlestick has to close below this zone. That's what I mean. The next 1 hourly candlestick has to close bullish below this zone. If it closes bullish below this zone, like it is, we expect the market to sell like around this point. But if it closes bullish above this zone, guys, know that the selling opportunity, or the chances of selling from this zone has become invalid at that point. The market would want to buy up to this level before it sells. So take note of these things I'm just mentioning in this video. If the next 1 hourly candlestick, if this current candlestick closes bearish, the next one closes bullish right here on this zone, you can take a sell. But if it closes above this zone, expect the market to buy up to this high before it then starts selling. So at that point, you'll be having a kind of a triple top. You'll be having first top, the second top, and the third top. Or if you like, you can look at it as a head and shoulders pattern. Then if you take the entry from here, your stop loss is going to be greatly reduced. Then your profit will be so much high. All right, so just take note of this these things I'm mentioning in this video, guys. All right, so that's it for this particular pair. Then the next pair I want you guys to look at is jump 50 index. I've been waiting for this pair to actually give me an entry, because looking at it from the daily time frame, okay, let's look at the 4 hourly time frame. I spotted an opportunity and expected the market to buy from here, but the market, you see, it broke and it sold below this zone. It sold below this zone. Let me reset this. All right, you see it sold below the zone I expected it to buy from. Now the market has bought again into the area. So what I'm expecting the market to do right now, so I can possibly take a buy, is the next one four-hourly candlestick to close on this zone. You see there's a consolidation that's been broken out. If the current candlestick closes bullish, then the next candlestick closes bearish on this zone, the same entry approach, then you're going to take a buy from here. And with the minimum lot size, there's a very high chance of you'll be risking too small, like maybe $3, as it is to make up to like $20, $30, or even the market. Even if you're taking your profit around here, it's going to be so much. You can see the risk to reward is about 1:9 point something on this. All right, so just keep an eye on this pair too, guys. And then do not forget the registration for the next mentorship batch, which is October, is coming up. Sorry, is ongoing. The registration is ongoing and will be ending anytime from now. Just try as much as you can to register for the mentorship. All right, it's going to be powerful. It's going to be massive. Lot of information to be shared. So like this video, share it in the comment section, and do not forget to reach out to me. Click the link in the description of this video to take you to my Telegram channel. From there you find my direct contacts. You can reach me on WhatsApp or Telegram. The contacts are there on Telegram, on the Telegram channel. So I'll see you guys in my next video. Stay blessed and peace out.